investmentstrategy.com.
Hello, this is Daniel Grady with a quick look at the markets for today, Thursday, May 22nd. We started the day pretty early today with PMI data from the Eurozone, starting at 7 o'clock GMT when we have French PMI, and then at 7:30 we have German PMI, and then at 8 o'clock we have Purchasing Managers Index for the entire Eurozone, so we could expect some volatility in the euro during that period. Half an hour later at 8:30 GMT we have GDP data from the United Kingdom, which could generate some volatility in the British pound as well as in British stocks. Also at the same time we have a series of ancillary economic data from the United Kingdom. Then at 12:30 GMT we have retail sales from Canada, which could generate some volatility in the Canadian dollar, of course. At the same time we also have weekly employment data from the United States, which could get some extra attention considering the release of the FOMC minutes from last month yesterday. Then at 1:45 in the afternoon, we have Manufacturing Purchasing Managers Index from the United States. And then 15 minutes later at 2 o'clock, we have existing home sales from the United States. Housing is a key component of the American economy and an indicator of economic strength, so we could see some volatility here if we have something unexpected. And then at 3 o'clock, it's not expected to generate all that much movement, but we have the release of the Kansas City Fed Manufacturing Survey from the United States. Moving over to the markets, the S&P 500 was up by 0.8% yesterday. This was after the release of the FOMC minutes, which showed that the Fed is not worried about inflation in the near term, and stimulus activity would be continuing for quite some time. During early trading today in the Asian session, Asian stocks moved higher, significantly higher after the release of the HSBC Purchasing Managers Index survey from China, which still showed a contraction but was still significantly better than expected, which was an indication that the Chinese economy is starting to stabilize, and the Chinese government's efforts to handle the economy is starting to pay off. Going into the session today, S&P 500 futures are trading up by 0.2%, which is an indication of a risk-on appetite for the moment. If we look at the euro yesterday tried to get below 136.50, which is our support level here, and failed to do so as we might expected. There's a strong support level and also the bottom of this trend line, though we have some the possibility of some strong volatility today. We might the euro might target 135.90 as our next as a second level of support. However, it's important to point out that that RSI is close to 30, which is an indication that it could be close to being oversold, and we might be looking at a rebound towards resistance at 137.50. The pound moved higher, and keeping within its range of 138.40 and 168.40 and 169. However, those are relatively weak levels, and with the expectation of volatility in the pound today, we'll be looking at our secondary support at 167.90 and secondary resistance at 169.90. The yen yesterday experienced some weakness, which put an end to the potential breakout here, and it moved above support at 101.25. There was a loss of interest in safe haven assets, which is the Japanese yen is broadly considered a safe haven asset, which may generate some strength in the which generated some weakness in the yen, and this pushed this currency pair higher, so we're back within our range of support at 101.25, resistance at 102.25. And then finally we have gold, which lost a little bit of value versus the dollar. This also again attributed mostly to a loss of interest in safe haven assets. So it's back to just above support here at 1,280 and resistance at 1,310. But considering the results from the FOMC minutes, we might see a move on the downside for gold over the short term, and I might be targeting 1,260 sometime soon. And that's it for today. Thanks for watching, and happy trading.